This is the Lew Rockwell Show.
Well, how wonderful to have as our guest this morning Mr. Peter Schiff. Peter is president of Euro-Pacific Capital. He's the author most recently of the little book of Bull Moves and Bear Markets. He's the great teacher of Austrian business cycle theory and the great predictor of the housing bust and so many other things. And Peter, recently I've heard a lot of talk from Wall Street people about the greatness of Bernanke and how he can and should be reappointed to the Fed because, after all, he prevented the world economy from going off a cliff.
Yeah, well, I would much prefer it if he was being vilified by Wall Street. He's popular on Wall Street because he saved Wall Street. He saved their bonuses and their cushy jobs, but at the expense of everybody else. I mean, I would prefer a Fed chairman like Paul Volcker, who everybody hated, who everybody wanted impeached. Not somebody who's, the favorite and the life of the party.
No, and I can remember when Paul Volcker actually cut the money supply. I mean, he didn't just cut the rate of increase. He actually cut it and stopped the inflation and set the stage for some actual growth. But no more Paul Volckers.
Yeah, I mean, the way you knew Volcker was doing the right thing is he was universally despised. Everybody on both the Republicans and the Democratic side, wanted him to resign. The only support he had was Ronald Reagan, and that was probably one of the best things that Reagan did was support Paul Volcker's independence and support his decisions.
No, and of course it was actually Jimmy Carter who appointed him. So it was, even though Carter had made the mistake of appointing G. William Miller, who was sort of a boob, as I remember. And then we had times in those days, in the 70s, when there were actually people in Europe not wanting to accept dollars in hand-to-hand transactions. And that's when, I guess, the establishment decided they better bring in Volcker to fix things.
Yeah, well, that's already happening around the world, and it is going to happen again. I mean, you've got a consensus, among most of the world's savvy investors, including, Warren Buffett here and Bill Gross, that the dollar, there's only one direction for the dollar, and that's down. However, most people seem to think that it's a good thing as long as the decline is orderly. But I don't think people holding dollars around the world consider the dollar losing value orderly to be a good thing when they own them. And I think as more and more people, resign themselves to the dollar's fate, they're not going to want to suffer it themselves, and no one's going to want to own a currency that is just going to decline gradually over time. Why would they?
Peter, is it a surprise that so many of the dollars, the trillions of dollars that Mr. Bernanke and company have created are remaining in bank reserves and are not being loaned out?
Well, it doesn't shock me. I mean, think about the opportunities to make loans. What are they going to loan to? I mean, the average American is already overly indebted and can barely pay back the money he's already borrowed. So does it make sense for banks to make new loans to over-leverage consumers? As far as businesses are concerned, most American businesses are relatively unproductive. They're already highly leveraged. We have so much taxes and regulation in this country that it seems like lending to businesses would be very risky, especially when so many businesses are involved in the service sector and they're going to be contracting. So I don't think there's a lot of great places for businesses to loan right now. I think they're more interested in trying to recapitalize their balance sheets because of all the losses on the loans that they've already made.
Well, Peter, it only took, 11 or 13, whatever the figure is, trillions of dollars in new money to raise the Dow by a few thousand points. What's going to happen if the Dow, goes down again, or I should say when it goes down again?
Yeah, well, it's going to. Look, I mean, there's no good news out there. I mean, look, even today, they're saying unemployment claims unexpectedly rose. I mean, people really think that the situation has turned around. I mean, it hasn't turned at all. I mean, sure, you had to get something for trillions of dollars of bailouts and stimuluses, so we get a short-term bounce. But it's not going to last, and then the market's going to turn down again, the economy is going to turn down again, and we're going to find that we're now in even worse shape than we were before because we've compounded our problems by adding additional debt.
Well, what does it mean if people overseas, and indeed people in this country as well, start to not to want to hold dollars? I mean, what exactly does that mean for the economy? What does it mean for the world economic situation?
Well, ultimately, it pulls the rug out from under, the phony economy that we've been living under, which is an economy where, we print money and exchange it for the actual production of the rest of the world, whether it's commodities or finished consumer goods. We've been getting a free ride in that the world has to expend real resources, labor, capital, to create products, and we simply run money off a printing press and call it an even exchange. And, we can get away with that so long as people are willing to hold on to our dollars and just, let them sit in the bank. But the minute they don't want them anymore because they're losing value, then our ability to exchange the paper that we print for the products everybody else makes is gone. And now all of a sudden it's a different world where we can only consume to the extent that we produce, and we can only borrow to the extent that we save. And when we are forced to live within our means, that is a major, major change and a major shock for our economy.
Will it be a major shock to the government as well? I mean, the government, which has certainly built its popularity with the American people, as you say, based on ripping off the rest of the world to some extent.
Yeah, I think so. And I think the American politicians are going to have to level with American people and say, look, we overpromised. We've been delivering government services and benefits and subsidies that we can't afford, and we have to eliminate them. And as a result of years and years of our bad monetary and fiscal policy, our economy is such a mess right now. We've left ourselves into such a massive hole that it's not going to be easy to dig our way out of it. So we are in some serious economic trouble. It's not fatal. It's not that we can never come back. I've mentioned often that countries have had their economy devastated by war, and then they come back. And I think in many senses we've lost the war. It's not that the enemies bombed our factories, but our factories are gone. It's not that we've squandered our savings, paying for the military, although in some cases we have, but our savings are gone and our factories are gone. We got to get them back, which means that, we have to accept a diminished standard of living in order to get an economy that's viable, recreated.